Welcome back to the portfolio, everyone. And in this video, we're going over the 5 stocks you should keep your eye on this month in October. We have a list of stocks that are a combination of both growth stocks and dividend paying. We have some high yield, some fast growth, and from companies from various sectors of the market. We have a very diverse list this week, and these are all solid companies that I believe will continue to grow over the long term. So we're going to go over each company, take a look at their future estimates, and determine if we like them right now this month. As you may know, everyone, I am the Gen Z investor, and every single day we talk about the stock market. We go over different stocks you can buy, overall stock market performance, and take a look at any big stock market news and headlines. And in this video, we're going to focus on 5 stocks you should keep your eye on this week. So please hit that like button and subscribe, and we're not going to waste any more time, and we're going to jump right into the first stock on this list, which is Amazon. The e-commerce giant has actually seen a decline over the past few weeks. It is down over 10% from its most recent high and is down over 7% this month alone. Over a longer term period, the company is still up. Nice gain of over 81% in the past 12 months. This company has been on fire. But you can see here they peaked as of late at over $3,500 a share and have seen a rapid decline from that point. So Amazon's in an interesting price point right now. They're on a pullback from their most recent high and maybe at an attractive price point to jump in and buy during this month. Why Amazon is very attractive right now is because this month they're hosting Amazon Prime Day. Amazon basically created their own shopping holiday. There's a lot of deals that go on the site, and this year Amazon Prime Day is going on between October 13th and 14th. So this month there's big deals and savings going to be happening on the Amazon website, and this company sees a rapid surge in demand, customer shopping during these 2 days. So the fact that Amazon Prime Day is happening this month, and Amazon, once these numbers come out after their Prime Day results, we may see a nice surge in share price, because I'm sure with retail stores being closed, consumers being forced to stay home, and the transition away from going into a store to buy items and now making those same purchases done at home is really going to help Amazon and really boost this Prime Day, and I believe they're going to see record Prime Day sales. This company has already been on fire. We already know Amazon is taking over the world and is dominating the market. 5 years ago, they had total revenue just over $100 billion, which was already incredible. Up to today, they've generated over $321 billion of total revenue in the past 12 months. Rapid surges in total revenue year over year. This company continues to expand and grow at an insane rate. If we take a look at some future estimates, Yahoo Finance surveyed a group of analysts, and they expect Amazon to grow at a rate of 36% per year on average over the next 5 years. This is not a total return. Per year estimated growth of over 36% over the next 5 years, which is absolutely incredible. Over the past 5 years, they've averaged over 100% growth. So this is definitely a growth stock to keep in mind. And with the fact that Prime Day, their own personalized event happening this month, I believe this stock may see some short-term price gain, and I believe Amazon will continue to grow over the long term as well. The second stock we're taking a look at today is an extremely high dividend-paying stock, which is AbbVie. Currently coming in at $87 a share, they're only up 15% over the past year. Once again, another company where they've been seeing a nice pullback away from their most recent highs. A 52-week high at around $101 a share, and you can see here a consistent downtrend over the past few weeks to where it sits at $87. This company has a massive dividend yield, currently yielding 5.39%, which is absolutely incredible. Also, they have an earnings payout ratio of 45%, which is very low and sustainable, and they have a massive 5-year dividend growth rate of over 20%. So this company, you're locking in a massive over 5% starting dividend yield at your purchase, but that dividend is continuing to grow at an extremely fast rate each and every year. Taking a look at some analyst reports, this one from Morningstar actually shows that AbbVie might be 10% undervalued at this current price point, and there's an estimated fair value for the stock at $95. So getting into a company with over a 5% dividend yield, very fast dividend growth at a price point where it may be considered undervalued, that is absolutely incredible. And taking a look, there are some price targets that see the share price growing on average of 25% in the next 12 months, reaching new highs at around $109 a share. And analysts have a recommendation of a buy on this stock right now. We have 5 strong buys, 9 buys, and 5 holds on this high dividend payer. And you can see here over their latest earnings reports, they've seen positive surprises in each and every report over the past 6 quarters. So a very interesting company to keep your eye on right now. And if you're looking to lock in some high dividend income over this next month, AbbVie may be one to take a look at. Stock number 3 this month to keep your eye on is another e-commerce company, which is Etsy. And why I believe Etsy is going to be a lot of kind of growth in the short term and the long term, and why I believe this is going to be a company to keep your eyes on and maybe a nice addition to a portfolio over the next few weeks, is because Etsy is focused on handmade, more unique style products being sold from either a business to consumer or consumer to consumer on their platform. So every individual kind of sells more creative, more unique goods, and they're not kind of those mass marketed products on their site. And why I think that's important right now is because we're getting into holiday season. And we're also getting to a point in the year where there's a lot of different holidays and celebrations where people want decorations. And the fact that people are forced to stay home more, I believe it's only going to drive the demand for home decor. So a place like Etsy, where they have Halloween, Thanksgiving, Christmas, and of course more specialty products on their site for each of those holidays, I really do believe it's going to accelerate their growth. And this company has already been on fire. Over the past year, they're up over 100%, but once again, similar to Amazon, as of late, they've seen a little bit of a pullback from their most recent highs. This is only a growth stock. They do not pay out a dividend, but with the growth stock, we expect high revenue growth year over year, followed by a similar trend in net income growth. And Etsy has seen massive revenue growth year over year of over 30% averaged in 3 consecutive years. And in the past 12 months ending June 30th, 2020, they've seen a 60% year over year growth in revenue, which is absolutely incredible. And analysts see, once again, a growth in share price on average of 24% over the next 12 months for Etsy. Overall, another company where recommended as a buy with 7 strong buys, 9 buys, and 1 unique sell. Overall, analysts are still expecting rapid things out of Etsy. The estimated annual growth rate for this company comes in at a whopping 57% per year over the next 5 years, which is absolutely incredible. So this is another high, fast growth stock to keep your eye on in October, which is Etsy, the e-commerce platform based on creating and selling stores full of products in the more unique kind of premium good service. Stock number 4 to keep your eye on in October is the fintech company Visa. And why I'm talking about Visa during this month, similar reasons to why I like Amazon and Etsy. When people are going to now be forced to make more purchases online, or even with people still going to retail locations, it's going to be more common this year more than ever that they use credit cards instead of using cash to kind of reduce the amount of germs in hand-to-hand transactions in these retail locations. And Visa, the market leader in that credit card industry, I believe is going to see record numbers, record transaction usage, a large volume of numbers going up, and the actual dollar amount spent using credit growing as well. So year to date, the stock is only up 6%. So in the overall market, and we saw a lot of tech companies up 50 to 100% over the past year, this year alone, Visa is only up 6%. Over the past 1 year, they are only up 16%, and they have actually not recovered back to pre-pandemic highs where we saw a peak around $215 to $217 a share. We haven't seen those numbers from Visa, and as of late, another pullback. So this is an attractive price point for this company because this year, their services and their products are going to get a lot of usage. And once again, similar to Etsy, the fact that we're seeing consumers now is the kind of time and point in the year where their demand and the actual use for shopping is going to go up, Visa is going to be an interesting company to take a look at. They're expected to have a price target growth of over 12% this year, and they do pay out a dividend, a very small 0.6% dividend yield, but they're only paying out 24% of their earnings, massively growing that dividend at a rate of over 20% averaged over the past 5 years, and they've been growing their dividend for at least 10 consecutive years. And because of the low dividend payout ratio, high dividend growth, they come in at a 99 for Simply Safe dividend safety score, which represents very safe The highest ranking given out is 99, which just shows Visa is a company where the dividend is so safe, very, very unlikely to be cut anytime soon. Stock number 5 to keep your eye on in the month of October is Pepsi, the consumer staple. This company's been around for an extremely long period of time, and I don't believe they're going anywhere anytime soon. Currently at $139 a share, this is one of the iconic dividend growth stocks to own within a portfolio. They're somewhat flat over the past 12 months, only up 1%. And you can see here, they're actually below their price point before we saw the March decline. Pepsi 52-week high comes around $147 per share, and currently at $139, they have actually not reached new highs since before the month of March. This is, of course, a dividend-paying stock, a 48-year dividend growth history. This company's been growing that dividend for an extremely long period of time, and they're very close to becoming a dividend king, currently yielding just under 3% with a 76% payout ratio and a very nice 5-year dividend growth rate of 8.4%. And to wrap off Pepsi, they come in with a 93 dividend safety score, which once again just shows that this company pays out an extremely safe dividend that is very unlikely to be cut anytime soon. So thank you for watching, everyone. Those were 5 stocks to keep your eye on in the month of October. All of these companies have some different reasons to why they may be attractive right now, different valuations, a combination of both growth and dividend paying stocks. So I hope you enjoyed this list. Please like and subscribe, and I will see you in tomorrow's video.